Good day and welcome to the earnings conference call of Divis Laboratories Limited for Q3 FY23. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. M. Satish Chaudhary. Thank you, and over to you, sir.
Good afternoon to all of you. I am M. Satish Chaudhary, Company Secretary and Chief Investor Relations Officer of Divis Laboratories Limited. I welcome you all to the earnings call of the company for the quarter and 9 months ended December 31st, 2022. From Divis Labs, we have with us today Dr. Murali K. Divi, Managing Director, Ms. Nilima Prasad Divi, Whole-Time Director Commercial, Mr. L. Kishore Babu, Chief Financial Officer, Mr. Venkatesha Perumallu, General Manager Finance and Accounts. During the day, our board has approved unaudited financial results for the quarter and 9 months ended December 31st, 2022, and we have released the same to the stock exchanges as well as updated the same in our website. Please note that this conference call is being recorded and a transcript of the same will be made available on the website of the company. Please note that the audio of the conference call is the copyright material of Divis Laboratories Limited and cannot be copied, rebroadcasted or attributed in the press or media without the specific and written consent of the company. Let me draw your attention to the fact that on this call, our discussion will include certain forward-looking statements, which are predictions, projections, or other estimates about future events. These estimates reflect management's current expectation of the future performance of the company. Please note that these estimates involve several risks and uncertainties that could cause our actual results to differ materially from what is expressed or implied. Divis Labs or its officials does not undertake any obligation to publicly update any forward-looking statement, whether as a result of future events or otherwise. Now I hand over the conference to Dr. Murali K. Divi, Managing Director, for opening remarks. Over to you, sir.
Good morning, ladies and gentlemen. Welcome to our earnings call for the quarter 3 of financial year 2023. I hope that all of you, your family and your friends are in good health. I am pleased to report that our manufacturing operations have been running smoothly despite the volatile global market scenarios, including the global recession, energy crisis, and geopolitical uncertainty. After having a great opportunity to service COVID products during last year, we are seeing normalization of our core API product portfolio, which is growing. And with the addition of new product opportunities that continue to grow further. We have implemented various strategies to ensure uninterrupted supply and maintain normal operations despite COVID surge in various parts of the world. We are continuing to maintain leadership position in our core products. Our top generic products continue to grow. This growth is primarily driven by volume despite pricing pressures. 275 crore rupees has been capitalized for the first 9 months of this financial year. We have a capital work in progress of about 575 crore rupees as at the end of the quarter. We would like to inform you that the Unit 3 facility near Kakinada has received the necessary clearances from government officials, and we are prepared for the prospective development of the same. We are currently finalizing the plan and will give you an update in the coming quarter. We are happy to report that Divis has continued to operate responsibly and make a positive impact in the communities where our business operates. During the last quarter, we implemented various CSR and sustainability initiatives, including infrastructure improvement in the areas surrounding our manufacturing facilities, which benefited thousands of people. With that, I will hand over to Ms. Nirma to share some operational and financial highlights of the quarter. Thank you.
Ladies and gentlemen, a very good afternoon to all of you, and thank you very much for joining us today to discuss the results for the third quarter FY23. I hope that everyone, along with your friends and family, is in good health. Considering the operational front, we had no disruptions to our customer shipments during the quarter, and we are operating with a commitment to fulfilling all our customer requirements on time. The global logistics scenario showed improvement with respect to sea and air freight costs during the quarter. However, minor disruptions in matters pertaining to manpower shortages continued, and we are being cautious about inbound and outbound logistic management to keep our operations smooth and meet our customer commitment. Raw material procurement and availability have been stabilized, and the material prices have slightly softened compared to the last quarter. However, the prices for some base metals like lithium and iodine have increased over the past quarters, and we are expecting this trend to continue. We are also continue to monitor the ever-changing energy situation. With a strong and reliable supply base and inventory control, we are confident in facing challenges that may come our way. As the world continues to change, our team stays vigilant. We are mindful of the global developments, tracking geopolitical tensions and energy prices. We are diversifying our supply base and working to mitigate risks so that we can keep our customer shipments on track and our supply chain stable. I would now brief you on financial performance for the third quarter of financial year 2022-23. We have achieved a consolidated total revenue of 1,822 crores for the current quarter as against a revenue of 2,510 crores for the corresponding quarter of previous year. Material consumption for this quarter came to be about 43% of the sales revenue due to change in product mix. Profit before tax for the quarter amounted to rupees 436 crores. Our effective tax rate for the quarter is 29%. We have a profit after tax of rupees 307 crores for this quarter. For the 9-month period, we have a consolidated revenue of about 6,100 crores and profit after tax of rupees 1,502 crores. Exports for the quarter continue to be around 87%, and export to Europe and America is about 69% of our revenue for the quarter and 70% for the 9-month period. Product mix for generics to custom synthesis is 55 and 45% for 9 months, and it is 60 to 40% for the quarter. We have a forex gain of rupees 47 crores for the quarter and a gain of rupees 134 crores for the 9-month period. As we have a lower sales revenue during the quarter, our constant currency growth for the quarter has been negative 40%, while it has been negative 17% for 9-month period. Our nutraceutical business amounted to rupees 160 crores for the quarter and rupees 509 crores for 9 months. As of 31st December, we have cash on books of rupees 3,849 crores, receivables of rupees 1,669 crores, and inventories of 2,981 crores. Thank you.
Thank you, madam. With this, we would request the moderator to open the lines for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Yeah, thanks for the opportunity. So first on the gross margin thing, so the kind of product mix that is there, so is this the sort of sustainable gross margin to look for going forward, and which is significantly down if you look at the historical trend? If you could elaborate on that.
Could you please repeat the question again?
The gross margin for the quarter has been significantly lower, while you alluded to the change in product mix being one of the reasons. But if I look at it, the historical trend rate, it has been significantly down. So again, considering the product mix, should the 3Q gross margin to be taken as a sustainable rate going forward, or there is more one-off or inventory write-off for the quarter?
It will improve in the coming quarters. It so happened in this quarter, the raw material prices have gone up and there were pressures on the sales prices of the API, and we anticipate in the coming quarters it should be better. There should be a growth and also a profitability growth. And also, I think you said gross. Even when it came to the net, because of the high tax rate of 29%, it has impacted naturally the profit after tax.
Okay. So then secondly, if you can highlight further in terms of the role played by Nilima Madam and Kiran, so given in terms of shifting of gears or work to the second generation.
Somehow the voice is not clear. Can you please repeat?
Is it better?
It's better.
Yeah. So my question was now that considering your age and considering the second generation also into the business, Nilima Madam and Kiran also would like to understand in further details in terms of the roles taken up by each of these, and how to look at this going forward.
I think the roles are clear that the finance, accounting, the material purchases or supply chain management will be done by Nilima. The production planning, marketing, sales, technology development, what we call R&D, will be handled by Kiran SVP. It's also being followed like this has been happening for the last 5 years. They both are heavily involved, and I just foresee the new products, new pipelines, new chemistries, what else can be introduced, like the vapor phase chemistry, continuous flow chemistry, photochemistry, gadolinium compounds, peptides. These are the new chemistries. I'm trying to see what can be introduced in addition to the regular generic custom synthesis. That's all being handled by both Kiran and Nilma, and we're also having professionals who are experts who have been with us for a number of years.
Understood. So this helps. And just lastly, if I may squeeze in, so when do we expect Kakinada, basically the construction to sort of start, or let's say in over next 12 to 15 months, how much money you plan to invest at Kakinada?
Finally, after 5 years since we started the first attempt to start our work in Kakinada, we got all the clearances, and the land of 500 acres is handed over to us. The project planning is under progress. Product planning, some of them are starting material, some of them are intermediate, some of them are APIs, and an investment of about 1,000 crores. And I think we will update in the very near future, because we have been handed over the land in the last couple of weeks. So we are protecting the land by constructing the wall around. We have moved the teams, construction teams and fabrication teams. So the whole, I think we will be updating in the coming week going forward.
Thanks a lot. This helps.
Thank you. The next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity, sir. Good afternoon. Sir, trying to understand, definitely the product mix has changed, generics has gone up. But within generics, is there a pricing pressure that you are seeing? Because this kind of gross margin and EBITDA margin we have never seen before. I mean, you have talked about raw material pressures in the past. But is it more related to pricing in the generics that you are seeing, or that is fairly stable?
It is mainly from the generic compounds where we have seen the price pressures, because during the COVID, several of the companies probably with generics did not get opportunity to sell. Now the growth is there, but there is price pressure. So, but going forward, we see the price pressure will ease up, and probably the raw material prices also may ease up and come down. We are seeing that, so the profitability should increase. We cannot compare with the previous 5-6 quarters where we had exceptional opportunity, we used speed, took challenges and executed. So it resulted in the upside during the last 6-7 quarters, the anti-COVID drug. But if you see the pre-COVID business, I think we are seeing normal growth in the coming quarters, and profitability should improve quarter on quarter.
Okay, just one point on the generics. So you mentioned there is some pricing pressure, but you also saying that you would see pricing to improve. So what gives us confidence? Are we seeing it already, or what gives us that confidence that generics pricing will improve?
We're already seeing the prices improving, and also the volumes improving. In several of the generics, we are seeing even a 50, 60, 70% of volumes improving. Naturally, when volumes improve, prices also improve. There is a change, and also our new generics and the contrast media, where there are no price pressures, I think we should look better in the coming quarters.
Fair enough. And secondly, sir, given the cash pile we have, are we considering any large buyouts, especially in the contract manufacturing side, injectables, something like that?
We are not planning to buy any injectable or anything like that. We are planning to invest in new technologies, as I mentioned a few minutes ago, in the vapor phase chemistry, continuous flow chemistry, photochemistry, and in some of the newer compounds called gadolinium compounds, which are of the MRI contrast media agents, where we have already developed a process. We are trying to tap with some big name people in that. And again, there is large interest in the peptide building blocks, and there is good demand in the expanded contrast media business. I think we are going to be very busy in the coming 6 to 8 quarters in implementing all these projects.
That's great. Lastly, on the Kakinada, you said 1,000 crores yet to be invested, or within the CWIP, what is the share of Kakinada, sir?
One second. We have planned Kakinada almost in the last 5 years, at least 5-6 times as if we are going ahead, but there was always a roadblock not getting the full clearances. Now we got full clearances based on our current requirements or demands for starting materials, intermediates, and APIs. We are grouping them and creating the infrastructure of utilities, and I think in the next quarter to 2 quarters, we should be the project should be going to full swing of construction.
So 1,000 crore is the capex we want to do going ahead.
That is what we planned initially, 1,000 crore investment as a phase 1, because we waited a long time. We have substantially invested both Unit 1 and Unit 2. Those projects where we invested in the new blocks, they are getting occupied, validations being completed, and commercial production will be starting. Some of them just started, some of them are planned in a phased manner as we get regulatory clearances. So we don't immediately need such capacity, but we foresee the capacity requirement as we have the new projects coming in.
I understand, sir. I was asking on the 575 crore CWIP, how much is Kakinada? That's what I wanted to understand.
Kakinada is not in that 575 crores. It's a small amount that is there in the, it is in the existing SEZ and UOU. That is where the investment is.
Okay, which will give us more capacity in the near to medium term.
Yes, I think you in the growth engines I have described about that some of the big CS projects, some of the products where they are expiring, some of the short-term, we planned with 3-4 quarters ago. That is what the work in process is, CWIP.
Okay, sir. Thank you so much and all the best.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants, please limit your questions to 2 per participant. The next question is from the line of Damayanti Keria from HSBC. Please go ahead.
Hi, good afternoon. Thank you for the opportunity. Sir, can you update us on your progress in the iodine-based contrast media projects which you are working for few last quarters? When we are expecting notable sales to come from these products?
Yeah. I think as I mentioned in the last quarter, that projects are under implementation. Now, 2 of the products are our own generic products, and the contrast media where we are doing custom synthesis, that project is already implemented. The qualification is done. Now it has just entered into commercial production, and you will see good numbers in the Q1 2024 onwards, by which time all the regulatory clearances would happen. And the strength for it, again, I would stress that is the capability of iodine recovery to the maximum, where it used to be $25 a kilo, it is $75 a kilo. Also, we have excellent relationship with the customers as well as the big pharma, where these contrast media are being used.
Okay, sir. So just to clarify, by first quarter of FY24, you should be starting commercial supply both for the custom synthesis project as well as for your own generic, right?
That is correct.
Okay. So my second question is on demand scenario for overall generics portfolio. So you mentioned that you are seeing good volume for some of the products where 50-70% increase has come on demand side. But on very broad basis, are you seeing recovery in demand from the customer for some of the base generic, which are like large products for you?
Yes, we are seeing a double-digit growth in some of the generics. That is the minimum, and the products are expanding as well as the customers who probably were some of the customers who are buying from elsewhere probably have issues, and that's where we are also getting a lot of demand from.
So in coming quarters, we should be expecting better volume growth on the generic part of your business.
That's correct.
Okay. Okay, sir. I'll get back in the queue. Thank you.
Thank you.
Thank you. The next question is from the line of Cinderella Carvalho from GM Financial. Please go ahead. I'm sorry to interrupt you, ma'am, but we cannot hear you clearly. Your voice is breaking a lot. We are unable to hear you. May we request you to please rejoin the queue? Thank you. The next question is from the line of Ashish Thavkar from IIFL Asset Management. Please go ahead.
Yeah, thanks for the opportunity. So you mentioned about gadolinium compounds, and I believe you are also on the iodinated contrast media. So given that this is a $7 billion market globally and market is growing at 10%, what kind of say will we be having in this entire market? How are we planning to move ahead with the commercialization of the molecules?
There are not many customers who would consume the contrast media or both iodine compounds, gadolinium compounds. There are only a handful in the whole world, and with majority of them, we are discussing for long-term agreements for the supply of these APIs.
Okay, so it's not intermediates, but you will be directly into APIs. So that's a fair understanding, right?
In most of the cases, they are direct APIs. In few of the cases, they are like N-1, N-2.
Okay. So, but would it be fair to assume that some of the bigger names they would also be doing in-house? Are they willing to shift the entire 7 to 8 step process to us? Is that a fair way to understand?
I wouldn't say that they will shift the entire, but we will get a decent portion of the business. Either a part of the contrast media is growing in the world at the rate of a minimum of 10%, and each of these contrast media, if they're about 2,500 to 3,000 tons, every year they need about 300 tons extra quantity. So in the last couple of years, if you count, they need about 600 to 1,000 tons planning for the next 4 years. So that is the kind of opportunity we are looking at. Number one, get some quantity from the existing market, and going forward, instead of these big pharmas expanding, we will be expanding in India. Number one. with reference to these new gadolinium compounds or other compounds where they are used for MRI, and also some of the newer ones, we are looking at supplying the N-1, N-2.
Okay, this helps. Thank you so much. So last question on the new pipeline, the NCA-based molecules that we spoke about in the second quarter commentary. You said there are like couple of projects which are there and could see FY24 launch. Any update on those lines would be helpful. Thank you.
That's right. This is the sixth growth engine where there is a $20 billion product expiring between 23-25. Yes, we have submitted for some of them drug master files. Some of them are getting ready to be submitted. So as soon as the customers have sampled, customers have purchased some quantities for that formulation purposes and stability studies to submit to the FDA. And I think going forward, it looks good as and when the patents expire. I think we should have the opportunity.
Okay. So you're confident of FY24 launch?
25 for sure. Even if it starts in 24, I don't think on day one we'll get very big volume, but in 25 we should get good volumes.
Yeah. Thanks and all the best. I'll get back in the queue.
Thank you. The next question is from the line of Neha Manpuria from Bank of America. Please go ahead.
Thank you for taking my question. Sir, could you, give...
interrupt you, Ms. Manpuria. May I request you to speak a bit louder?
Is this better now?
Yes, please go ahead.
Okay. Thanks so much. Sir, could you give us some color on the extent of pricing pressure that we've seen in the quarter? And also just trying to understand the gross margin a little better. Is there some impact from, let's say, high cost inventory for raw materials that we used in the quarter, and as raw material costs are coming down, we could probably see improvement in gross margins? Is that one of the factors that we should consider?
Yes, one of the factors could be that if you recall in the last 2 years, I think some of the raw materials I think the prices went up by 2x. Just Neelma was mentioning a while ago on the lithium. The same thing goes for several other materials where we have procured them at high prices, and some of them still we are procuring at high prices. And we see now a drop in prices, or at least price pressures coming down. So across industry, I think people face the price pressures. Now it's loosening, and we should expect better margins in the coming quarters.
And sir, what about the API price, realization decrease? How much would it have been on an average, let's say, over the last year or quarter on quarter, if you could give us some color?
It is surprising that some of the APIs had price pressures where the prices came down 5%, 10%, whereas some of the APIs where we just entered, we were able to maintain good prices, and even prices have gone up, depending on, I think, how many suppliers are there. I think what will happen finally is that if there is a supplier who would continuously supply without interruption and maintaining the quality, I think customers have no choice but to buy from them. So that's where we see that we are positioned and we should be able to get better prices.
So is the API realization pressure more on the older products that we are selling rather than the new launches? Is that a fair assessment?
I think if I have to say that, I would say it is across portfolio, but naturally in some of the new products, there could be little more pressure depending upon how long several people have been with stock waiting. when they may disappear after the stock is once the stock is disposed into the market. Then the prices will stabilize.
Understood. And sir, on Kakinada, now that we are starting work, by when should we start seeing the facility being ready for, let's say, validation, regulatory approvals, and eventually commercial production? Would it be more, 2 years, 3 years? What sort of timeline should we look at?
I think we should be able to look in 2 to 3 years, any time after 2 years.
Commercial production or validation?
No. These are two things. I think I said that we'll be doing some starting material with difficult chemistry,
okay,
some advanced intermediates, and some APIs. For APIs, definitely initially we'll be selling to the other markets while we are qualifying for the regulatory market. But the raw materials, starting materials and intermediates, we should be able to consume them for our existing products to increase our further capacity.
Got it. Thank you so much, sir.
Thank you. The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah, thanks for this opportunity. I just wanted to understand the pricing situation in the APIs and intermediate better. Is it anything to do with the China open up, or it is a crude correction or inventory rationalization? Now what we would be seeing post the strong demand situation during COVID, what it's a few quarters that we have been witnessing. So anything to do with that, the current price situation that we are witnessing for the APIs and intermediates?
Can you just repeat the question again, please?
Hello? Yeah. So this, to understand this price erosion or price correction in the API, I'm just trying to understand whether this correction what we are witnessing suddenly in this quarter is because of the China open up scenario what we are witnessing. Is that, or the recent crash or the sharp correction in the crude prices that we have witnessed, or that we are witnessing any kind of inventory rationalization situation at the customer's end after seeing a kind of inventory built-up situation during COVID over the last many quarters. So what is really impacting these prices? Because we have not seen this kind of broad-based price erosion case in case of APIs in many of the names.
The pricing pressure, I think, is not only with us, it is across the industry and across products. Now, yes, you are right that the pre-COVID, during COVID, post-COVID, there is a difference in the consumption of the therapeutic segments, and now slowly the therapeutic segments are coming back. So we don't know the real stocks at each of the either API manufacturers or dosage manufacturers, but we felt the pricing pressures. I'm sure everybody is feeling it across the industry, and we see the raw material prices getting better in the right now what contracts we are entering. So we expect that in the coming quarters, not only will we have the volume growth, I think we should be having a profitability growth as well.
Okay. So in fact, the margin scenario for the quarter is the lowest ever. And this is not only because of the gross margin slippage, it is also because of the spike in the other expenses. So there also, what is that has that? Whether it is the energy cost element or it is the freight cost one, what is really has? See, can you tell, sir, what is the share of this freight cost element in your overall cost?
I think it is not just one. I think one is the plant maintenance cost went up because several of the buildings or several of the utilities we have built them in the 1995. We started implementing rebuilding some of those plant structures, And also we have invested heavily in replacing some of the old safety systems with new safety systems. You must have heard recently popping up here and there few accidents, and we are making sure that we are removing all those old pipelines, old electrical cables, which we installed in the early years. That's probably one of the reasons. Two,
Okay.
also you must have seen the taxation went up. When it comes to the profit after tax, the tax what it used to be 12, 15, 18%, this is the highest, I think 29, 30% almost. That's what we have paid tax.
Okay. So just if I try to ask slightly differently, let's say the sequential 10% correction in the margin what we are witnessed, what portion of this would be quarter specific for this quarter, which may not be there in the following quarter, either because of the improvement in the pricing scenario or few of the cost elements which will not be there, like maintenance ones and all that. So this is really low number, and this is a big negative surprise to the street. So that's why I'm trying to understand a bit more better.
I think we are, after we have seen the COVID drug, where we have high margins, high productivity, where we achieved, coming back to the pre-COVID production schedules, all modifications and getting into the new, utilizing those as some of those assets to the reorienting them to make the current again generic products or these products. This is where some of the costs went into them, and fully geared up, and we should be able to see not only double-digit growth in terms of business, but also profitability.
Sure, sir. Just last question about the new capacities what we had added, both in the two sides. So around 15 odd units that we had added incrementally over last 1.5 year period. So out of that, how many of the units are underutilized or not been utilized so far or commercialized so far? What is the kind of spare capacity that is there, and how long that spare capacity can ensure our growth momentum going ahead? Because this quarter there is no problem in the revenues. It is just the margin which you are saying that it would be improved subsequently. So just about the revenue growth visibility. So what is the spare capacity that we are having? Will that be sufficient enough to drive growth till the time the Kakinada facility is ready for commercialization?
Currently we are occupying about 75 to 77% of occupancy. That leaves 23% of 25% of free capacity. So going forward, as in the growth engines where we said that the future growth engine 6 and the Sartans engine and capacity increases where we have done the qualifications being either completed or getting completed, regulatory agency clearances being completed. I think all this, I mentioned in the last quarter and before quarter, earlier quarters also, it will take about 2 years to get into the full benefit out of them. So we have enough capacity for all that, and we need not worry about that.
Sure, sir. Thank you. Wish you all the best.
Thank you. Participants are requested to limit their questions to 2 per participant. The next question is from the line of Shyam Srinivasan from Goldman Sachs. Please go ahead.
Thank you. Good afternoon, and thank you for taking my question. Just looking at 3Q and comparing 3Q 23 to 3Q 21, so December 2020, most of the numbers are absolutely the same. Like look at generic API, custom synthesis, nutraceuticals. So my question was, historically, Dr. Devi, we had a 10% growth coming through on, and I'm removing all the 5-6 quarters that you talked about, which had got say, COVID drug molnupiravir benefits, and just looking at like a 2-year, so that growth has not happened, right? There's been no 10% growth even on that base portfolio, excluding all that. So if you could disaggregate and say, is that underlying that business, has it seen volume growth, and all that volume growth has been taken away by price? Would that be one way of looking at it?
The volume growth has happened and is happening, and we are foreseeing that it will continue. I think double-digit volume growth, we foresee that it will continue. Now, yes, the price pressures were there. That has impacted on the profitability, which we are hoping with the raw material prices being either stabilized or going down, not going up. So we should be able to get back to our profit margin on the gross level. On the taxation level, I cannot comment at this moment based on how the projects which we planned in the SEZs, how soon they will come into commercial production in terms of clearances with regulatory authorities. As and when they happen, of course, you will see the taxation coming down.
Got it, sir. That's helpful. Just following up here. So generic API or nutraceutical, I understand some pricing pressure, but custom synthesis, why should that number is also same, 680 crore in 3Q21 and 675 crore this quarter. So just any thoughts there on what's happening on custom synthesis or custom that particular line item specifically?
On custom synthesis, it's different. It's not on the profit margin. There is no profit margin issue with that. Now, during the COVID and towards the end of the COVID just happened in the last 2 months, we all were able to remove the mask and were able to freely walk around, whether it is in this country or abroad. But everybody, all the companies had preferences towards to see how good they can push the COVID drug, ever big pharma, instead of looking at other therapeutic segments. Now everybody stepped on the pedal now for every other therapeutic segment product. So we are seeing now number of projects coming to us from the various big pharmas, multiple opportunities in all therapeutic segments, and we don't have any pricing pressures from the big pharma's business.
Got it, sir. So just last question. I don't know, maybe you'll answer this, but will we go back to this 10 to 15% historical growth rate that we have talked about in the past in some time in the future?
Why not more?
Okay. Thank you.
Thank you. The next question is from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Hi. Thank you so much, sir, and a very good afternoon to you. Can you update us on the fast-track CS projects that we talked about?
There are 2 big fast-track projects. We have completed the projects. We have validations completed for both. Both are in the commercial ramping up. You will see some values in the Q1, Q4 of our financial year, and the Q1 they should be fully ramping up. Q1 of 23-24.
Okay, that's great, sir. And this is pandemic related, non-pandemic related?
Both are not non-pandemic related.
Okay, got it. And so just on contrast media, now that you are getting very close to commercialization, any number that you can share? Is it like 100, 200 crore opportunity to begin with, or any color would be great, sir?
I think it should be bigger. It should be larger. Because the business is much larger. We are aiming at bigger numbers.
Okay, that's good to hear. And so just on margin bit, your normalized margins, used to be 40%, give or take, and that's where you used to aim. EBITDA margin, you are probably closer to 29 now. So what's the roadmap for that? You have explained many things, and it's going to improve and all of that. But do you think you can get to this number at all, and is it in the foreseeable future? That would be very helpful, sir.
We are not talking about immediately in the next 3-4 quarters to reach such level, but definitely it is possible. We are making a lot of efforts with the new chemistry to how to minimize material consumption and how to increase the throughput. So I think we will see the 2000 in the next 2 years. Probably we should be back with such, and we have several opportunities we are getting from the big farmers. So we should be able to again see in the next few years. Yes.
Okay, great, sir. And sir, can you split very broadly, qualitatively, custom synthesis business? What percentages or what part is commercial molecules versus how much is contributed by developmental quantities? I mean, is it 50-50 or is it skewed more on one side?
We have never disclosed or given any details on the developmental products for the big farmers because we have signed several confidentiality agreements. But it's very good, I would say. We have never seen so many opportunities coming, and they'll be implemented in groups. So I think in the next 2 years, these small volume products will go into the multiple tens of tons or higher.
Okay, that's great. And so Kakinada.
To Mr. Besiwala, may we request you to please rejoin the queue? We have
participants
waiting for the time.
Okay, no worries.
Thank you. Participants are requested to please limit their questions to 2 per participant. The next question is from the line of Cinderella Carvalho from GM Financial. Please go ahead.
Am I audible?
Yes, you are. Please go ahead.
Thanks for the opportunity. Sir, you had mentioned on last call that regarding the pandemic supplies that we had almost closed those orders for our partner. Our partner has given some more guidance also now. Just wanted to understand from the inventory that we are carrying with us today, do we have anything pertaining to this pandemic-related goods with us today out of the 2,981 crores that we highlighted?
We do not have any stock. The stock, whatever we made or already shipped, and we don't have any stocks of any API for them. They are shipped as and when made.
That is very helpful, sir. So, coming back to the API pricing that we spoke about and the entire recovery that you are talking about, can you help us understand, can we see the reversal of, say, the top line around 1,800-1,900 in the coming 1 or 2 quarters' time, or you think it will take 3-4 more quarters to be at that run rate at the top line? And as soon as the top line comes back, should we expect the margins also to revive to the same extent?
I don't want to say quarters, but definitely we are on the way. A double-digit growth, and double-digit growth also reflects in both for the sales as well as profitability. And going forward, I think we talked about all the 6 growth engines, and they should be able to see us to not only get back to the pre-COVID, but I think further ahead.
Okay, but sir, in terms of if we try and understand, you are saying improvement in the volumes on the generic side as well as on the price side should follow. And you're saying that there will be a custom synthesis project also which could start shipping in Q4, and we'll see maybe once FY24 we'll see a full quarter. So in the light of these two comments, how should we see? If you can help us understand qualitatively, we will also do, not on the number perspective entirely, but that's because the numbers have been fairly moving up and down because of pandemic supplies. So just want to understand some clarity
there. Going forward with the two big custom synthesis projects where their contribution will be seen the potential from the Q1 of 2022-24, and I think it's also our generics with a double-digit growth. I think we should see a good growth. We don't want to say anything about the custom synthesis or generics, separating them, but I think overall the growth should be there and also increase in profitability.
Thank you. The next question is from the line of Chirag Dagli from DSP BlackRock. Please go ahead.
Yes, sir. Thank you for the opportunity. Sir, quarter on quarter, the mix is not very different. Custom synthesis business is 40% this quarter versus 43% in the second quarter. Despite that, our gross margins are down almost 7 percentage points. Two questions there. Why is that? You talked about product mix being different. So if you can just give a little more color around, why this large 7 percentage point QOQ dip in margins, and is this across both the pieces, generic as well as custom synthesis, or is this more to do with generic business?
I think we have made it in the past very clear that the one-time opportunity, with the opportunity, we didn't. Though we should not wish that the COVID should be there and the API should be consumed, the profit margin or profitability of the anti-COVID drug was definitely a better one. And when it was there in those quarters, and in the last quarter, in the quarter just we went through, minus COVID drug, I think this is where we are with the pricing pressures on the APIs and also on the increase in raw material costs, which I have explained that going forward in the coming quarters per year, we should be able to get back to the normal mode and growth mode without the COVID drug.
Okay, sir. Is generics more impacted than custom synthesis?
Pardon?
Sir, is generic gross margin more impacted than custom synthesis gross margin?
Yes, but the custom synthesis, the impact is less because there is no pricing pressure from the customer. It's only the raw material prices probably, some of them went up, some got compensated, some did not by the customer. Whereas in generic, nobody will compensate you for the increase in raw material prices when the generic APIs more are available, if they are.
Thank you. The next question is from the line of Sayatan Maji from Credit Suisse. Please go ahead.
Yeah, thank you for the opportunity. So, just wanted to understand what was the proportion of sales from, US and Europe, and do we see the pricing pressure in both these markets, or is it mostly in the US market that you're witnessing this?
Can you repeat the question again, please?
Yeah, I just wanted to understand the proportion that you mentioned in the opening comments on the US proportion of sales coming from, US and Europe and exports. And the generic pricing pressure that you're observing, is it in the US or the Europe market?
The export to Europe and US is about 70% of our revenue for the quarter and 70% for the 9-month period. So between the Europe and US, we don't differentiate because the orders come from Europe and we ship to US, the orders come from US, we ship to Europe. So we don't differentiate much, and there are no price pressure differences between Europe, US. I think the difference is not there, but overall there can be little lower in price in the regulated market, and of course in the non-regulated market it's much lower. The products are more.
Okay. And what would be the proportion of export sales for this quarter?
Exports accounted to 87%.
Okay. Thank you. That's all from my side.
Thank you. The next question is from the line of Naushad Chaudhary from Aditya Birla Sun Life. Please go ahead.
Hi. Thanks for the opportunity. Two clarifications, sir. Firstly, on the CSM business side, can you explain us what is your pricing policy here, and typically how often you revise your prices, annually, 6 monthly, and in which all months it is loaded heavy?
Good question.
Price revision policy in CSM business.
Pardon? The pricing policy, it's not the revision of pricing policy. It is being discussed with the customers and see what is happening in the market on a quarter-on-quarter basis. Usually the contracts are over a long period of time, and some of them are discussed when the pricing periods are more from the customers. But usually on a quarter basis we will discuss, but there's nothing like pricing policy on quarterly basis. It's driven by demand and supply from the customers.
Okay. Secondly, on the operating deleveraging side, sir, is there any challenges we are facing on the operating deleverage because of the infra we had created for the COVID-based product? Is that creating giving a cost load to us on the balance sheet on the P&L, or is it forcing us to do some low margin product, and that's why we are facing the challenge currently?
Well, at this point, what we see is as the sales increase and the growth is driven more by the profit and the normalcy comes back into place, we would say that the operating leverage would be more favorable.
Okay.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to Mr. Satish Choudhury for closing comments.
Thank you all for joining us today for the earnings call of Divis Laboratories Limited. In case you need any clarifications, please reach out to our investor relations. Thank you.
Thank you. On behalf of Divis Laboratories Limited, that concludes this conference.